please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, we do have Dhananjay Sinha who's joining in to discuss the markets as well as their latest report. Well, Dhananjay, before we discuss your report, let's start, talking about the markets as a whole. We have the rupee, which is at 70, almost at 73. We have Brent crude, which is, almost just about moving towards 80. What are your thoughts in terms of what kind of specific stock calls you're taking at this point and your call on the market as a whole?
So I think as far as the rates are concerned, as far as crude oil is concerned, I think, and the combination of that with FX, I think that's a macro variables that is panning out, and it is going to be a permeating thing across various sectors. So, clearly the impact is this, that you have a sort of a 30% rise in crude prices and about 15% depreciation in the currency. So that adds a considerable amount of almost like 40% plus increase in the crude cost in rupee terms. So there is a significant increase in the cost factors. So clearly from a market standpoint, the earnings is something that one would look at. I think with these kind of things, I think the margin pressure is definitely going to come in. So I think that we will have to see. I think with respect to which sectors get impacted more, if you look at the correlation and the lag that, sectors with which it responds to crude prices. So the first one is consumer, FMCG sector. Auto space will get impacted. You will also see that impacting material space, etc. Because not only the raw material costs will rise, you will have logistics, packaging costs, etc. also rising. So I think clearly the expectation on earnings that people have, so the consensus earnings even after the curtailment in earnings for full year FY19, there was a 2.5-3% reduction in expectation. I think the full year estimate was still about 25%. I think there is a considerable amount of downdraft as far as expectation is concerned. So I think that is an important thing. We think that with the combination of rising yields and exchange rate depreciation, I think one important thing will be that you will actually have implication for rate sensitives, especially for the PSU banks, NBFCs, companies who have large mismatches.
Got it. Yeah. No. So the reason we invited you today, thanks for that market view. But you got an interesting note, Dhananjay, on mutual fund inflows, right?
Sure.
And you got a very contra kind of a view, because so far it's been a structural change in the way people sort of put their money into different asset classes, and it was all led by this big flow into mutual funds. You are saying that it's kind of peaked out and it remains a big risk for broader markets as well. Just explain that briefly, because we want to dig a little deeper into that. Yeah.
So the thing is that we were saying that this is cyclical because the amount of flow that had happened between 2016 and 17, especially after demonetization and GST, you had significant surplus money that came into the system. Part of that actually moved into equity mutual funds as well. A large part obviously went into debt mutual funds. So you had, if you look at the equity linked or equity related funds, the net flow I think was a peak of something like 20,000 crores per month last year. I think it remained there for few months, and then if you look at the current context, I think there is almost like a 70% drop from that level on a year-on-year basis. So clearly we were anticipating that that increase in yields, tightening in liquidity, etc., will result in reversal in the flows that had happened. So that is clearly the case. We also sort of emphasize that while that bunching up of flows happened, you had a significant distortion in the broader market. So if you look at the mid-cap indices, they went up on a trailing basis to a multiple of almost like 51 times by December. And we said that is almost like 100% premium to the benchmark index. And clearly, if you look at period prior to 2014, it used to trade at 15% discount. So clearly, this flow abundant flow also resulted in a significant froth in valuation in the broader market. So clearly that was something that we identified a year back. And this study basically looks at almost like 30 years of data of how households have behaved in the equity market in the past 3 cycles since we have sort of highlighted since 1992. There is a correlation between market behavior, which is market multiple and flows. So there is a positive correlation of 0.8, and the causality is bidirectional. So it's a virtuous cycle on the way up and a virtuous cycle on the way, vicious cycle on the way down. So this has happened.
Based on the kind of exuberance that you're talking about in terms of the mid-cap valuations, are you expecting a further correction from current levels?
Of course. So the thing is that we are saying that as things normalize, I think you might, and you have a currency depreciation, you have rates which are hardening, and then you have sort of elections also coming in, and what is happening globally is also sort of creating certain uncertainty. So that is one aspect. As far as the retail investors are concerned, the way they sort of behave is that they look at the NAVs. So they look at 3 months performance, 6 months performance, likewise. So based on that, they respond. So our analysis also shows that the correlation of flows to NAV or market performance peaks out in something like 3 to 4 months lag. So if you have a NAV, which are negative, NAV performance which are negative for 3 to 4 months or 6 months in succession, you might actually see the interest of households into equity mutual fund dissipating. We are already seeing that there has been a 70% decline in net purchases or net sale of
Dhananjay,
funds.
okay, fair enough. What happens to SIPs? Because we got the, I think, number, we don't get the number immediately, but it's still about 7,600 or so, 7,600 crores in the month of August, right? Because discretionary flow, yes, that has stopped, but what will happen to SIPs? Yeah.
So our view was that based on the study that we did, we said that 50% is only structural and 50% is cyclical, and cyclical flow is vulnerable to market performance. I think the other thing that one has to really notice is that if you look at the last 30 years. So the strongest cycle was between 1992 to 1996, where household money savings going into equity and equity related things went to almost like 10% of the total financial assets. So that was one thing. Then it fell after 1997 crisis. It just vanished for 6 years. Then it rose again after 2004. Went up to 6% and then 6.5%, and then vanished. So if you look at between February of 2008 to April of 2014, where, a month before Modi government came to power, you had a net redemption of 900 crores per month. So you can't consider SIP to be continuing with the same pace if the returns that investors get become negative and NAV performance is hence very critical, that you might actually see SIPs also getting vulnerable if there is a sustained negative returns on equity mutual funds.
Okay, all right, Dhananjay, we've completely run out of time, but pleasure speaking with you and listening to your views on the markets.